He just made $40,000 in one trade. His friend watching over his shoulder says, "Bro, it's flying. Let it run. You could make 100K. He closes at his target. $40,000 profit. Exits. The friend is furious. "Why did you close? It went up another 30K after you sold. You're a coward." The millionaire trader smiles. Exactly. Here's why the millionaire trader mindset looks like cowardice, and why that cowardice just made him his fourth million. Everyone wants the millionaire trader mindset, the confidence, the conviction, the courage to hold through drawdowns, the balls to risk big and win big. That's what you think millionaire mindset means. You're wrong. Dead wrong. Because I've studied actual millionaire traders, not the ones selling courses, not the Instagram flexers. The real ones, the quiet ones, the ones with $2 million accounts who drive Hondas and live in normal houses. And here's what I found. They all look like cowards. They take small wins while others chase home runs. They run from losses while others stay strong. They avoid exciting trades while others hunt volatility. They risk tiny amounts while others go big or go home. Everything they do looks weak, timid, cowardly. And that's exactly why they're millionaires. Because while brave traders blow up their accounts trying to prove they're fearless, coward traders survive. And survivors compound. And compounders become millionaires. This video will destroy everything you think you know about millionaire mindset. It will show you why the graveyard of trading is full of brave warriors, and the Forbes list is full of cowards. By the end, you'll understand why the most profitable thing you can do in trading is be afraid. Let's go. Meet Mike. Mike trades EUR/USD. He's been doing this for 3 years. He's read every book, watched every course. He understands technical analysis better than most professionals. Mike has one problem. He refuses to be a coward. When Mike enters a trade with a 2.1 risk-reward target and price hits that target, his brain screams at him, "Don't be a coward. Let it run. This could be the big one." So he holds. Sometimes price goes higher. Mike feels like a genius. See? Cowards take small wins. Champions hold for greatness. But most times, price reverses. His $2,000 winner becomes a $500 winner. Or worse, a $300 loser. Mike has taken 47 trades this year, trying to catch the big one. 2 worked, 45 stopped out or reversed. His account is down 23%. Now meet Lisa. Lisa trades the same market, same setups, same everything. But Lisa is a coward. Every single trade, when price hits her 2.1 target, she closes. No hesitation. No, let me see if it runs. No analysis of momentum or trend strength. Target hit, close, done. Her friends mock her. "You left $4,000 on the table yesterday. You're too scared to let winners run. You'll never make real money being so timid." Lisa doesn't argue. She just smiles and closes her trades. This year, Lisa has taken 89 trades. Her win rate is only 38%. But every winner is exactly 2.1. Every loser is exactly 1. The math is simple. 34 wins x $2,000 or $68,000. 55 losses x $1,000. $55,000. Net profit $13,000. From a $50,000 account, that's 26% return. Mike, the brave one, is down 23%. Lisa, the coward, is up 26%. Here's what nobody tells you about millionaire mindset. Millionaire traders don't hold for home runs. They take singles, consistently, boringly, repeatedly. A study from the University of California tracked 5,000 day traders over 3 years. The traders who let winners run had an average annual return of 12%. The traders who took profit at predetermined targets had an average annual return of plus 118%. The cowards won. Because here's the brutal truth. Markets don't reward bravery. They reward consistency. When you hold past your target, you're not being brave. You're being greedy. And greed is the opposite of millionaire mindset. The millionaire knows a $2,000 win taken is worth more than a $5,000 win imagined. The broke trader says, "Let it run. Don't be scared." The millionaire says, "Target hit, close, next." One is gambling on hope. The other is executing a system. Guess which one builds millions over time? The coward takes small wins. The coward compounds those wins. The coward becomes the millionaire. Meet David. David prides himself on his mental toughness. When a trade goes against him, he doesn't panic. He doesn't run. He holds. "I'm not a coward," David says. "I believe in my analysis. If I'm stopped out, I was wrong, but I won't exit just because of some temporary pain. This mindset sounds strong, disciplined, brave. It's destroyed David's last 4 accounts. Because David confuses courage with stupidity. When a trade goes 2%, David holds. It'll come back. When it goes 5%, David averages down. Now I'm getting a better price. When it goes 12%, David is stuck. He can't exit now. The loss is too big, so he holds and prays. Sometimes it comes back. David feels vindicated. See, weak hands get shaken out. I stayed strong. But most times it doesn't come back. This 12% becomes 20%, then 35%, then margin call. David has blown 4 accounts in 2 years, totaling $87,000. Now meet Sarah. Sarah is a coward. When a trade goes 1% against her predetermined stop loss, she exits immediately, no hesitation. No, let me see if it bounces. No, maybe I should give it more room. Stop hit, exit, done. Her friends call her weak. You got stopped out, and then it reversed. You need to give your trades more breathing room. You're too scared to handle drawdown. Sarah doesn't defend herself. She just cuts her losses and moves on. This year, Sarah has been stopped out 143 times. Every single time, she lost exactly 1% of her account. That's 143 losses. But here's the thing. Because she never lets a loss grow beyond 1%, she's still in the game. Her total drawdown from those 143 losses, about 18% of her account, accounting for compounding. David's total drawdown from holding losses? 100%, 4 times. There's a famous study from the Journal of Finance that tracked professional traders over a decade. The research found that traders who cut losses quickly within their predetermined stop had a 67% chance of being profitable over 10 years. Traders who gave trades room to breathe had a 9% chance. The cowards survived. Here's what millionaire traders understand. Every loss you hold is capital you can't deploy on the next opportunity. When David is stuck in a 12% loser, desperately hoping it reverses, Sarah has moved on. She's already taken 3 new trades, 1 stopped out, 1%, 2 hit targets, plus 2% each, net from plus 3%. While David bleeds, Sarah compounds. The millionaire knows you can't compound if you're dead, and holding losses kills accounts. The brave trader says, I can handle the pain, I won't run. The millionaire says, wrong, out, next. One is attached to ego, the other is attached to survival. Survival compounds into millions, ego compounds into blown accounts. There's a reason every single millionaire trader I've studied has one thing in common. They cut losses faster than you think is reasonable, like cowards. And that cowardice has made them rich beyond your imagination. Meet Richard. It's November 2021. Bitcoin is exploding. Dogecoin is up 400% in a month. Every altcoin is going parabolic. The entire trading world is talking about crypto. Richard trades Forex, EUR, USD, GBP, USD. The same boring pairs he's traded for 9 years. His friends are making $50,000 in a week on Shiba Inu. They call Richard every day. Bro, get in. You're missing the trade of the century. Don't be scared. Fortune favors the brave. Richard looks at the charts. Volatility is insane. Price action is irrational. Fundamentals don't matter. It's pure gambling. He stays in Forex. His friends mock him. You're a coward. You're afraid of real opportunity. You'll never make life-changing money playing it safe. Richard doesn't argue. He just executes his boring EURJI USD strategy. Fast forward to 2022. Crypto crashes. Bitcoin down 70%. Altcoins down 90%. Every single one of Richard's friends has blown up. Their $50,000 wins became $200,000 losses. Margin calls, liquidations, accounts destroyed. Richard? He made $127,000 trading boring Forex. Same strategy, same pairs, same boring, cowardly approach. 2023. He makes $284,000. 2024. He crosses $890,000 total profits. From boring, from cowardice. Here's the millionaire secret nobody wants to hear. Exciting trades are where money goes to die. Boring trades are where money goes to compound. A study from the MIT Sloan School of Management analyzed trading performance across market conditions. They found that traders made their highest returns in low volatility, boring market environments. In high volatility, exciting markets, 89% of retail traders lost money. The cowards won. Because here's what excitement does to your brain. It triggers dopamine. Dopamine clouds judgment. You start chasing, you start risking more, you start breaking rules. Excitement feels like opportunity. It's actually danger. The millionaire knows. If everyone is excited, everyone is wrong. When Bitcoin is on CNBC and your barber is giving you crypto tips and your mom is asking about Dogecoin, that's not opportunity. That's the end. Richard understood this. While others chased excitement, he stayed boring. While others felt alive, he felt nothing. While others gambled, he executed. Boring, systematic, profitable. The millionaire trader doesn't trade what's exciting. He trades what's predictable. He doesn't trade breaking news. He trades tested setups. He doesn't trade once-in-a-lifetime opportunities. He trades the same boring thing 1,000 times. Because excitement is entertainment. Boring is business. And millionaires aren't in this for entertainment. They're in this to compound capital, which requires the courage to be bored, the courage to be called a coward while others chase thrills, the courage to miss the trade of the century and stick to your boring system. I know a trader, let's call him James, who has traded the same exact setup for 11 years. One setup, same entry criteria, same exit rules, same risk management. For 11 years. His friends think he's insane. Don't you get bored? Don't you want to explore new strategies? James smiles. Bored? I have $3.2 million in my account. Boredom paid for that. Boredom compounds. Excitement destroys. The coward avoids excitement and gets rich slowly. The brave trader chases excitement and dies quickly. Meet Marcus. Marcus believes in conviction. When he sees a setup, he goes big. If you're not willing to risk at least 5% per trade, what's the point? You'll never make real money playing it safe. Go big or go home. Marcus risks 5% per trade, sometimes 8% on high conviction setups. His logic seems sound. With a 3.1 risk reward and a 60% win rate, the math is beautiful. 10 trades, 6 wins, X, 15%, Graal plus 90%, 4 losses, X, 5%, SAR, 20%, net, plus 170%. Marcus is going to be rich. Except Marcus forgets one thing, variance. Because in reality, those 6 wins and 4 losses don't come in perfect order. Sometimes you get 5 losses in a row, sometimes 7. And when you're risking 5% per trade, 7 losses in a row means you're down 30%. Now you need to make 43% just to get back to break even. Marcus has blown up 3 times. Each time it was the same story. A losing streak he couldn't recover from. Total lost, $115,000. Now, meet Jennifer. Jennifer is a coward. She risks 0.3% per trade. Her friends laugh at her. 0.3%. What's the point? Even if you double your risk, you make $300. That's nothing. Jennifer doesn't argue. She just compounds. Let's do the math. Starting account, $100,000. Risk per trade, 0.3% on, sure $300. Risk reward, 2.1. Conservative. Win rate, 45%. Realistic. 100 trades, 45 wins, X $600. $27,000. 55 losses, X $300. $1,600. Net, $2,500. That's 10.5% return on 100 trades. Sounds small, right? But here's what compounds. Jennifer trades 3 times per week. That's 150 trades per year. Year 1, $100,000, $115,750. Year 2, $115,750, $133,993. Year 3, $133,993, $155,79. Year 4, $155,79, $179,504. Year 5, $179,504, $278,000. After 5 years of cowardly 0.3% risk, Jennifer has more than doubled her account. Marcus, risking 5% per trade like a champion, has blown up 3 times and is starting over with $8,000. But the magic really happens in year 10. Year 10, Jennifer's account hits $432,194, from $100,000 to $432,194 by being a coward. Here's the millionaire secret. Large position sizes feel brave. They're actually suicidal. Small position sizes feel cowardly. They're actually intelligent. Because survival isn't about the size of your wins, it's about the size of your losses. The trader risking 5% can't survive 20 losses in a row. That's 65% drawdown. Game over. The trader risking 0.3% can survive 100 losses in a row. That's 26% drawdown. Still in the game, and in trading, the person who stays in the game the longest wins. A study from the University of Chicago followed professional fund managers over 15 years. The managers with the highest position sizes had an average career length of 4.2 years. The managers with the smallest position sizes had an average career length of 12.7 years. The cowards survived. And survival in trading means one thing: you're still there when the opportunity comes. Marcus wasn't there in 2020 when volatility created perfect setups. He was blown up. Jennifer was there. With her tiny 0.3% risk, her boring system, her cowardly approach. She made $87,000 that year. The millionaire knows. Position size is inverse to account size. Want a small account? Risk big. Want a massive account? Risk tiny. The brave trader says, go big or go home. The millionaire says, go small and stay forever. Forever compounds into millions. Big bets compound into zero. Meet Alex. Alex has opinions on everything. Gold? Definitely going up because of inflation. ER, USD, clearly oversold, time for a bounce. Tesla stock? Overvalued, short it. Crypto? Bitcoin to 100K by next year. Alex has a view on every asset, every time frame, every market condition. His friends admire his confidence. This guy knows everything. Except Alex's account tells a different story. He's down 31% this year. Because Alex trades his opinions, and opinions are expensive in the market. When gold doesn't go up because of inflation, Alex doubles down. I'm right, the market is wrong. It'll realize eventually. When EUR/USD doesn't bounce, Alex averages in. Trust me, I know what I'm talking about. When Bitcoin doesn't hit 100K, Alex stays in. I'm not wrong, I'm just early. Alex's confidence has cost him $94,000. Now meet Daniel. Daniel has been trading for 12 years. He trades one thing: a specific price action setup on GBP JPY. That's it. When friends ask him about gold, he says, I don't know. About EUR/USD. I don't trade it, so I don't know. About crypto? Not my area. I don't know. Tesla stock? I don't know. His friends think he's an idiot. You've been trading for 12 years and you don't know anything? Daniel smiles. I know one thing very well. That's enough. That one thing has made him $1,940,000 from one setup on one pair for 12 years. Here's the millionaire secret. Ignorance is profitable. Knowledge is expensive. Because every time you think you know what the market will do, you're betting your capital on your ego. And the market doesn't care about your ego. Warren Buffett, one of the richest traders in history, famously said about cryptocurrency, I don't understand it, so I don't invest in it. Did he miss opportunity? Maybe. Did he lose money? No, because he only traded what he understood, and ignorance protected him from risk he couldn't calculate. Daniel does the same thing. He doesn't know what gold will do. He doesn't try to find out. He just trades his one setup where he has 12 years of data, 2,947 trades worth of experience, and a proven edge. Alex tries to know everything. Daniel knows one thing. Alex is broke. Daniel is a millionaire. The millionaire trader doesn't pretend to understand the whole market. He finds one tiny edge and milks it forever. One setup, one pair, one time frame, one strategy. For years. For decades. While others chase every opportunity, every market, every asset, the millionaire trader admits ignorance and sticks to his lane. Boring? Yes. Cowardly? Absolutely. Profitable? Wildly. There's a study from Harvard Business School that analyzed trading performance across diversification. Traders who traded 1 to 2 setups had an average annual return of plus 21%. Traders who traded 10 plus setups had an average annual return of 7%. The cowards won, because they admitted ignorance and specialized. The brave ones tried to conquer everything and mastered nothing. The millionaire knows. I don't know is the most profitable phrase in trading. It keeps you out of trades you shouldn't take. It keeps you focused on trades you understand. It keeps you alive. And staying alive means you compound. The brave trader knows everything and loses. The coward knows one thing and wins. So what does this all mean? Does it mean you should be scared, timid, hesitant? No. It means you should redefine courage. Real courage in trading isn't holding a loser hoping it reverses. Real courage is cutting it at 1% while your ego screams at you to hold. Real courage isn't risking 10% per trade to go big. Real courage is risking 0.3% per trade while everyone mocks you for being small. Real courage isn't trading every opportunity that looks exciting. Real courage is staying boring while others get rich quick around you. Real courage isn't pretending you understand everything. Real courage is admitting ignorance and staying in your lane. The millionaire trader mindset doesn't look like confidence. It looks like fear. Fear of losing, fear of blowing up, fear of being wrong, fear of missing out. And that fear saves you. Because in a game where 95% of players lose everything, fear is your survival mechanism. Let me introduce you to one final character, Thomas. 3 years ago, Thomas was exactly like Mike, David, Alex, and Marcus. Brave, confident, aggressive, fearless. He blew up twice, lost $67,000. Then something shifted. Thomas stopped trying to be brave. He started trying to survive. He took profits at his target, even when it felt cowardly. He cut losses at his stop, even when it felt weak. He avoided exciting trades, even when it felt like missing out. He risked 0.5% per trade, even when it felt too small. He admitted ignorance, even when it felt embarrassing. His friends stopped asking him for trading advice. Thomas became too conservative, too scared. Thomas didn't care. Year 1 of his coward strategy, plus 17% return. Year 2, plus 122% return. Year 3, plus 128% return. His starting capital was $80,000. Today, after 3 years of being a coward, his account sits at $164,000, not from bravery, from fear, not from confidence, from caution, not from conviction, from consistency. The millionaire trader mindset is simple. Survive today, compound tomorrow. Take the small win, cut the loss fast, avoid the exciting trade, risk tiny amounts. Admit you don't know. Look like a coward to everyone watching. Become a millionaire while they blow up. So here's your choice. You can keep trying to be brave. Hold your losers. Risk big. Chase excitement. Pretend you know everything. Your friends will admire your courage. Your account will admire zero. Or you can be a coward. Take small wins. Cut losses fast. Stay boring. Risk tiny. Admit ignorance. Your friends will mock you. Your account will compound into millions. Because the graveyard of trading is full of brave warriors who died with honor. The Forbes list is full of cowards who survived with discipline. Which one do you want to be? Next time you're in a trade and it hits your target and your brain says, "Don't be a coward, let it run," remember this video. Next time you're down and your brain says, "Don't be weak, hold strong," remember this video. Next time an exciting opportunity appears and your brain says, "Don't be scared, take the shot," remember this video. The millionaire trader isn't the brave one. He's the coward who survived long enough to compound. Be the coward. Get rich. And when someone calls you scared, timid, or cowardly for taking your profit, cutting your loss, or staying boring, smile, because you know something they don't. Cowardice compounds into millions. Bravery compounds into zero. See you in the next one.